Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. And this is your crypto recap, where I go over some of the developments in the crypto space. So let's just get straight into it. Okay, so here we are. Haven't really moved that much in the last week. It's been a bit of a indecision sort of candle, not quite a spinning top, but we've definitely seen these before, like back here, for example, in July, where, we had a big move up and then a few of these indecision candles. So we'll have to see what we do over the next week or two, because I think if we get a few more candles like this over the coming week, then we may grind down a little into the halving. So we'll have to see if that even plays out. I mentioned a couple of videos ago that I did have a small short open for Bitcoin, and that was for a number of reasons. We had red candles on the stochastic heat map as well, but for the most part it was the pivot surge strategy, and it's just a small position just to farm points in drift for the most part, but I'll probably be taking profit at like 49,500. That's a 21 smooth moving average on the 12 hour, so most likely I'll take half of it off there, and we'll see how we go, because I don't see, unless there's a big event or something like that, we'll get any big moves to the downside for BTC, because the ETF inflows kind of are keeping things afloat for now, although we still do have GBTC selling at the same time. So it's a bit of a tug of war at the moment between outflows and inflows with regards to Bitcoin. Also, something else that happened this morning is that Ethereum actually hit a 52-week high. So it only just touched above the most recent one, which was put in a couple of days ago. So it's just slowly peaking out above, but I did post on X my position on this one. I entered down here at the break of this structure here. So as soon as we got a break here, I started opening my position, added to it on the line down here, which is a average 2 range line, and we revisited perfectly. So it's technically not my position, it's close to here, but I just leave this on the chart because this is something that I built into a super trend strategy, which uses Heikin-Ashi candles essentially, but you can see it on normal candles. So it automatically shows the position and everything like that. So I know it's just kind of nice that it just automatically plots on the chart. But anyway, Ethereum's been going crazy. So since this little breakout of structure, it's gone up 27%. So my guess is it's got to do with, ETF speculation, stuff like that. But also Ethereum's just been kind of doing nothing for quite some time. So, it's about time that it sort of took off. And another development in the ecosystem is we have the Blast L2. So Blast is a L2 for Ethereum, essentially, just another one, but it's made by the same team that brought us Blur. They're building an L2 scaling solution for Ethereum, and there's an early access for the WEN Exchange. So, I thought initially when I saw this, I thought it was to do with the Solana ecosystem, but then I realized it's actually for Blast. So you can actually, if you just come over to my X link in the description below, you can actually just click on this referral link and you can join the early access to this platform if you are interested in the Blast L2, and you can get some tokens essentially just for joining. So it's not so bad. You do need to connect your X account and your Discord. You need to follow them essentially, and then there's a check for that. The other thing as well is that the permissions for the X connection might be a little bit much for you. So if you don't like what permissions that you grant it, then you could just go into your settings and revoke them straight away, which is pretty much what I did. But nevertheless, you still sort of get into this early access anyway. So basically it's a airdrop for this WEN exchange. And if they're using WEN as a $sign, then that's going to get really confusing because Solana has a WEN too. So anyway, and we can see here that slowly, according to at least Coinbase volume, we got retail slowly coming back in. So this is Q4 2023. So it'd be interesting to see what Q1 2024 looks like compared to this. I think we're going to start slowly creeping back up. So very good to see. This is by K33 Research. I've just reposted it. And, we're nowhere near sort of where we were even Q4 2020, but we've definitely surpassed Q2 2020. So if we're looking at the previous bull market, it's just a blip on the radar, so to speak. So this is the kind of stuff we see during the bull markets. That's Q1 2021, which was an insane time for altcoins, and Bitcoin had already gone up a ton by then. But then people were started to diversify their profits from Bitcoin into altcoins and stuff like that. So anyway, we'll have to see how this will look in the coming quarters. So recently, Uniswap proposed that they would integrate revenue sharing into the token. First, I just wanted to go into a breakdown of the proposal and what they plan on doing. So Uniswap Foundation proposed changes to its governance model, potentially introducing revenue sharing for Uni token holders. This proposal aims to incentivize active participation and thoughtful delegation within the Uniswap ecosystem. The proposal suggests tying delegation to protocol fees, potentially rewarding users who stake their tokens. This could create a compelling reason for users to hold and engage with Uni. This proposal has been met with significant enthusiasm, leading to a 50% increase in price. Well, actually, it went up 70%, so it went up a little bit more than that. In the last 24 hours, it has reached a 2-year high of $12.73. Here's a couple of reasons why this is potentially a really exciting development. Revenue sharing. The potential for Uni holders to directly benefit from the success of Uniswap protocol through fee sharing is a major incentive. Now, the revenue for Uniswap is really, really high, and I'll go into some figures in a little bit just to sort of show just how much revenue that Uniswap actually generates. So we'll increase engagement most likely by rewarding active participation. The protocol could lead to more engaged and invested community, potentially driving further growth for Uniswap. So it's possible that Uniswap's proposed revenue sharing for token holders could set a precedent for other governance tokens, but it's really too early to say with definity. If the proposal is successful and Uni experiences sustained growth due to revenue sharing, other protocols might be incentivized to explore similar models. And I've mentioned in previous videos, similar projects like Jupiter Exchange on Solana, which is a DEX aggregator. It's not actually just a swap platform like Radium, but it's kind of a one-stop shop, and it's sort of the place that people go, whereas Uniswap's sort of the first place most people go when it comes to trading on Ethereum. I would say that Jupiter is probably very similar as the sort of one-stop shop for people that are using the Solana ecosystem. And they don't currently have any revenue sharing built into their model, but they do have token airdrops. However, it's something that we might see in the future for Jupiter, which would give it another utility. So addressing a common challenge, governance tokens struggle to capture value for holders beyond voting rights, but revenue sharing could offer a solution, attracting more users and boosting token value. And it could create a domino effect, because if it's successful, other protocols may adopt similar models, and it could create a snowball effect, influencing the broader DeFi landscape. So that's kind of like one of the hot topics for the week, and I go a bit more into this, and I understand that comparing Jupiter to Uniswap, it's not a like-for-like product, but I think that when it comes to the first thing you think about when you are engaging with these ecosystems, that's kind of my thought on it, is the projected potential growth. And when you look at the daily active users and daily use of certain protocols on Solana and Ethereum, essentially Ethereum Uniswap takes the cake when it comes to Ethereum for the most part, and Solana Jupiter takes the cake for the most part. So that's why I'm making the comparison. So I know they're not exactly the same product, but I think it's still fair to make comparisons. So what if Jupe introduced similar revenue sharing into the token that Uni just added? Well, this would be super bullish. We'll have to see how it goes in the coming year, because we don't have that much data to work with for Jupiter Exchange. We only have a few months of users actually interacting with the Jupiter Exchange, because prior to November last year, the fee revenue, and that's what we're going to really compare here, because that's what revenue sharing depends on, is fee revenue of the product, only really spiked up in the late months of last year. So we don't have that much data, but we can project some sort of growth patterns and potentially speculate on what this would look like. So Uniswap generates significant trading volume, often exceeds 1 billion daily. It has been operational for several years, suggesting a potential larger accumulated revenue compared to Jupiter. And this is over time, right? So Jupiter experienced a surge in trading volume in 2024, briefly surpassing Uniswap, and it did. On a couple of days, it surpassed Uniswap in terms of the trading volume, which is really, really impressive for something so nascent. However, it lacks the extensive track record of Uniswap, making the annual revenue estimations less reliable. So factor that in when I show my next chart. So let's go over another Uni versus Jupe comparison. I project that the retail influx projected for the bull market coming up will be priced out of using Ethereum, because the gas fees are just really high on Ethereum. You're talking at the moment even $30 transactions, and in the peak of the bull market we could be looking at several $100 transactions. So retail literally will be looking for alternatives. So I think that they will likely see Solana as a solid second option. I suspect that Jupiter Exchange's growth would be projected as slightly higher with that factored in. Obviously, Uniswap, people that are using it are whales for the most part. You want people that can afford the fees. So it's not like there'll be a reduction in the growth of Uniswap, but I just think with the influx of retail, we'll probably see a slightly higher growth in Jupiter Exchange. So here is a estimated growth for the next 6 months. We're comparing here projected fees for Uniswap and Jupiter over the next 6 months of growth. So again, this is only based on a couple of months of data, and I used WEN Analytics to plot this. So this is showing the fees in the millions, essentially, and this is the estimated growth trend. I've put 0.5% for Uniswap and 1% roughly per month for Jupiter. Again, it will be up and down, so nothing goes in a straight line like this, obviously, but for Uniswap, a modest growth rate of 0.5% per month has been applied to the projection, considering the new revenue sharing model. For Jupiter, a slightly higher growth rate of 1% per month has been applied due to the Jupiter airdrops and the potential increase in retail trader activity as a result of high Ethereum gas fees and steady growth of the Solana ecosystem. And we can see over here in WEN Analytics, we can see that it peaked out late last year in December, and we had a $1.7 million day, which is really crazy. And then we've got like 1.36, 1.2 million. I mean, these are really high numbers in terms of fees that they are actually being able to accrue. So it's too early to say what they will do with this. They did say they will distribute some of the fees into the DAO, but this is early days. It only just started, so we're talking about 2 months worth of data here, or just over 2 months worth of data here. So if this remains consistent, then sky's the limit on what Jupiter might actually offer, and they might build revenue sharing into their tokens similar to how Uniswap did. So this is why I'm making a comparison. I think it's kind of fair comparison, and the purpose of this comparison is working out potential price appreciation for each token. Main thing is that Uni will have revenue sharing built into the token, and Jupe at the moment has annual Jupiter airdrops for the next 3 years. So there's still plenty of good justifiable reasons to use Jupiter, because the more volume you put through it, the more you get airdropped. However, the token itself doesn't really have anything built into it to encourage people to hold on to it, whereas Uniswap, well, price should reflect the revenue sharing model. So moving on with more Solana ecosystem updates, we've got the network revenue from gas fees. So again, gas fees on Solana, which again, gas is very, very low, but the whole concept behind this is that it's a lower gas fee, but with more transactions, validators will accrue revenue through just the sheer volume of transactions going through Solana. So in February 2023, so that's this time last year, Solana's daily gas fees was 0.2% of Ethereum's. Though remember, a lot of people bailed from Solana because of the FTX collapse. So that's probably something to factor in here. But as of last month, Solana's daily gas fees surged to 8% of Ethereum's, which is really, really impressive. And just counting clicks and clicks alone. So whether that means anything meaningful is up to you to decide. But Jupiter Exchange's website records an impressive 6 million in clicks in the last 60 days via the Phantom Explorer, making it the top trending platform. So you can see here Jupiter, Radium, Drip, Magic Eden, Tensor. So Drift is down the bottom there. I'm surprised, and even Pith network staking is above Drift. So I really hope to see that Drift picks up soon. Camino is definitely leaving a mark in the ecosystem too. So I think for the most part, people just seem to be swapping and trading NFTs. That seems to be the most thing. And then we got Bird Eye. So that's your meme coin degens. And then we got people actually using the money markets. So Camino and MarginFi, Pith staking because of the speculative airdrops that are coming to Pith stakers, and Drift is down the bottom there. So Jupiter's definitely taking the cake in terms of clicks. Very, very impressive to see, and fuel more for that thesis that I mentioned before. Still, nevertheless, as I mentioned, Drift's actually had its biggest week to date. So this is not just clicks, this is actual usage of the platform. So we had 1.9 billion in weekly volume, over 90k users on the platform. So the pie is growing. Look at that huge spike in weekly trading volume on Drift. Not just people farming points, I think they just like the platform, to be honest, because it is one of the best perp dexes in my opinion. So I did mention this in my last video, but let's think about this a little bit more. So imagine if you're using Drift and you could use the JLP as liquidity, or collateral rather, to trade against, because Drift is a cross-collateral platform that uses a weighted amount. So there's an LTV, how much you can use of that balance in order to trade against, but you can use Jupe, but not JLP. So imagine if you could use the JLP as collateral. Every day, your underwater positions are de-risking by the JLP yield, and that's plus 22% since the start of the year. So that would be really, really cool, I think. And we're seeing more platforms start to integrate the JLP into their systems. So I think this is something that we could see soon and be really, really cool. So Mango Markets actually has something that allows you to boost your JLP or utilize JLP boosting to earn very high APY on USDC. So this is Boost by Mango Markets. They leverage the Jupiter Exchange JLP to boost yield. But what I can see at the moment, so at the moment it's better to deposit USDC, as this is what is used to leverage the JLP to increase yield, and borrow rate is around 100%. So supplying USDC, you can earn from this. The purpose of this platform is to deposit your JLP and leverage up by borrowing USDC to increase the yield of the JLP. However, because the borrow rate is so high, you actually don't earn anything from this if you did put your JLP into it. So in this case, it's more earning USDC, but the up to 129%, I believe, is just the JLP current APY for holding that token. So in this case, I would say that depositing USDC is better. If I'm wrong and it's the JLP yield that's just baked into it with the additional 129%, then that's just insane. But I don't think that's what it is, so that's why this is what I'm seeing. I did read docs and the FAQ, and I didn't see anything specifically stating that just out of the box without leveraging you get an additional 129.85%. But if you do, then that's pretty crazy. That would be right now about 250% on JLP, but I don't think that's what it is. So this is why I've focused on the USDC component. Keeping on the high yield potential, we've got, again, I mentioned the last video, FlexLend. So they actually have rewards in WEN tokens. So if you were using this before they posted this, so new users or anyone that's using the Solana Saga, then you actually can get WEN rewards, but you've got to hold your balance in there for an extended period of time. Personally, I didn't quite meet the mark on this, and also I wouldn't anyway, because all I was doing is putting my USDC from my WEN profit into this temporarily, which earned me like, I don't know, a couple of cents essentially, until I redeployed it, which I only just did about an hour ago, into the WEN token because my strategy told me to, and I'll cover that in a little bit. But either way, if you deposit above 100 USD in value, and that's any token for at least 1 week, then you can earn WEN with FlexLend. So that's really, really cool. And people were asking if when you use FlexLend, does it still farm points? And the answer is yes, because you can see here, unfortunately, MarginFi can't report because the API, I don't think, supports external view of points, but at least with regards to Camino, it does. I don't think Solana even has like a points program at the moment. Maybe they will, but they're pretty old school. They've been around since the last cycle. So I don't know if they'll do anything like that, but nevertheless, you can see your points in here. I got 439 points for the time I had my money in this vault for this USDC. And so that definitely contributed to it. And you can see that, yeah, MarginFi, it would be definitely accruing points, but it doesn't show you, unfortunately. So anyway, I think that's still pretty good. It means that, you know, you're earning the most yield and you're basically hopping between these platforms. And if they do have a point system, then essentially you'll be earning those points if deposits are, or you require 4 points for however long that your funds are in there before it hops to the next one just to get the highest yield, essentially. So something I saw yesterday, that's the Shadow, which is GenesisGo, which is very similar to Filecoin. The whole market was red essentially yesterday, but Shadow was going strong. It put in a 47% move to the upside. In fact, it actually went up to a peak of 58%, but it seems that people are taking profit on it from this little spike to the upside, which is pretty typical. We're still in a range overall for Shadow, but this is really nice. There's a good amount of support here, so people just keep buying this in anticipation that it will take off, akin to Filecoin. And in terms of the whole Shadow versus Filecoin, it's a quite nice gesture here from the giant Filecoin, and it's what we love to see. The crypto space is huge, and you don't have to be the first and or the biggest to be relevant. In a healthy free market, users will always have the choice according to their needs and preferences. And Filecoin replied to the message from Frank that I read out in my video where I covered this, and they said, "Together we pave the way for Web3 adoption." So yeah, it's nice to see. It's not all one big competition, right? It's better to work together to make the Web3 space a better place and pave our way for mainstream adoption. Also, another mega thread by Kryptolytix. Another one, this is about Shadow, and this is definitely something worth a read. It's a pretty large thread, so I'll let you read this if you're interested. But a lot of details about the project you'll find in this thread there, and you'll find that posted on my X profile, or you could just go over here to Kryptolytix X and find the post there, but it's a really good thread. So in terms of price speculation on Shadow, well, Filecoin could do a 10x very easily, right? Well, does that mean Shadow has the ability to do a 50x? Maybe. That would be a 13 billion market cap. That's not too crazy. And as I mentioned, with regards to the Sol Andy tools that I covered a couple of videos ago, with regards to trying to get back some of your Sol or tokens if your wallet has been compromised by a website, some further developments here. But the only thing that needs to be fixed on this, I think, is the token rent account at the moment. So transferring and creating token rent account, that's just something that he'll need to build into the app if he really wants to build it out. But anyway, there's a few more developments on that front. So unfortunately, the Avalanche chain went down for about 5 hours, and that's very similar to the amount of time that the Solana chain went down for recently. I said in this, if this was Solana, people would be doom posting and shilling ADA, no doubt. I mean, come on. If you're on X and during the time where Solana was down, that was pretty much all I saw. But it took about 5 hours to get them back up and running. So anyway, it happens to us all, I suppose. But yeah, in terms of uptime, what's a chain that hasn't been down as of yet at all? Is super cheap, has sub-second finality, and is building out and looking to be something very, very impressive. And that is Injective. That has been up 100% of the time. Don't know why it thinks I'm in Puerto Rico, but whatever. I grabbed this straight from the Injective website. So that might be where this website's hosted. But anyway, 100% uptime since the start of Injective, although it hasn't had a massive influx of users yet to really test it. Nevertheless, it's still been up the whole time. Staying in the Injective ecosystem, we have Neptune Finance. It's finally launched properly off of their testnet, and I'm currently using it. There's no huge APY on it at the moment, in terms of lending and borrowing. And unfortunately, this site is geo-locked, which kind of sucks. At the moment, you can earn about 1% on USDT at the moment. I just borrowed a little bit. This is just to farm points for the potential airdrop if it comes. They do have a leaderboard, which tells you that, yep, they're probably going to do something based on the leaderboard. I'm 1,318th. I'm never that high, so I don't really care. I got 648 points just from using this, depositing some collateral and then borrowing against it. And that money that I borrowed, I put into Panther, into some bots. And I'm going to do a full deep dive on the Injective ecosystem very soon with all the things that I'm using. So stick around for that if you're curious. I'll be doing that in the coming week. So yes, Neptune is a money market, so it's lending and borrowing protocol on Injective. So there's a potential airdrop via their leaderboard, as I mentioned. Potential PITH airdrop, so this is something that's been mentioned. So there is a potential for this. All you have to do is connect to Neptune, deposit collateral, and you can also loop stake if you really want, but I'm just doing really basic stuff at the moment. So I think this is the first money market on Injective. So this is akin to, your Solend or your Camino, for example, on Solana. So anyway, again, if you do deposit money in here, probably don't deposit too much. I've probably deposited a little too much, like 8 Injective or something, but it's only about a month old, and I used the testnet and it was a pretty smooth user experience. So if you're interested, then come over and give these guys a follow, because I think some big things will be coming to them if Injective does gain some major traction in the coming bull market. Keeping Injective, this is a Injective specific DeFi portfolio tracker. Now it's made, I believe, by the same team who created DOJO, and I'll show DOJO a little bit in a second, but it has no access to Helix yet, which is a bit unfortunate because I use Helix a lot, but it does have Injective staking and has some auto compounding vaults, which is really, really cool. So this is the Ninja Vault, really, really cool tool. And as I mentioned, they do have these cool vaults where you can use this, and it does say it's auto compounding, but you also get additional rewards, I believe. This DOJO APY, 134%, that's pretty crazy. Coin Bureau recently did a video on Injective, so that's pretty cool. And in that video, it was with the co-founder, Eric, and there was a lot of stuff covered in it. So there was the in-EVM, there was the Bolin upgrade, gas compression, and real-world tokenization. So definitely a video worth a watch. So if you follow Coin Bureau, then I would probably give that one a watch if you're curious about the Injective ecosystem, because there's a lot of cool information in there. A recent launch on DOJO, and because they are a launch pad and they do airdrops, was Sushi, and this thing went absolutely ballistic after it released. So this is the new 404 token standard and directly connected with DOJO, and it's looking to be something people are pretty bullish on. Remember, for the airdrops, and I won't go into this in too much detail because I'll do the dedicated video on this, you need to read what you need to do in order to qualify for the airdrops. Same as the launchpad, this was the Sushi launchpad, and in order to be whitelisted for it, you needed to have the DOJO INJ LP with them as well. So that was how you were able to get whitelisted for that, but you could still potentially have been airdropped. So come over to DOJO Trading /airdrop if you want to check and claim any of your airdrop tokens. Some of it might just be crumb drops, as some people say, or just some dust, but others might be alright. Also just based on your staking in Injective, so something worth checking out anyway. So something I saw that was really cool, a new development for SUI, or SUI. SUI is just water in Cantonese, so I believe that's what it means, and that's why people in Hong Kong really love it. But SUI performs an offline transaction. This is very impressive. So Kostas Kryptos is a co-founder at Miston Labs, so he actually posted this on 5th of February, a landmark moment in the evolution of crypto and blockchain. First ever transaction in SUI where both sender and receiver didn't have internet access. This will change everything, even my own perception on what is possible today. Very, very cool. So again, an internetless transaction that went through. I don't know how the hell they did this, but it's really impressive. There's no doubt. Few other things in the SUI ecosystem. We have this internetless transaction. That's pretty crazy. ZK logins. Users enjoy SUI, dApps, and games without the need of a wallet. Pretty cool. ZK sends SUI to anyone in the world without the need of a wallet. I don't know how that works, but that's really cool. And pack together multiple diverse actions in one single transaction, which is the PTBs. So SUI is slowly building out. Very bullish. Price action definitely reflects that. You have a look at the charts, but yeah, either way, pretty cool developments for SUI. I mentioned a couple of videos ago about the Avail airdrop, and apparently, according to the Discord for Avail, neither TIA or DYM stakers will be getting a airdrop. Now, this is just based on one person, so we don't know for sure, but you know, there's a good chance that TIA or Dimension stakers won't be getting Avail, unfortunately. So I guess it's all just speculation and hope when it comes to most of these airdrops, to be honest. But Cosmos Airdrops posted saying, just wait for DYM stakers, it will be good, Avail soon. But people are bringing this up that, you know, there's a good chance that this won't be the case, but as this person says, do you believe what they say? So we'll see who's correct, I suppose, at the end of the day. Another interesting thing I saw was the NOIS network did something called a RAND drop, which is just like a 1 in 3rd chance of potentially getting an airdrop from them. So you can just come over here to randdrop.nois.network, connect your Kepler wallet, and you get a 1 in 3 chance of getting an airdrop with them if you're staking Injective, also Osmosis as well. I didn't get it personally, but maybe you will. Another Cosmos airdrop that we could be looking at soon is this Kinetics Fi. Now, I really like the name of this. I mean, Kryptolytix. I like things with K and X's in them. I don't know why. It just kind of looks futuristic and cool. So I like the name of this project, at least. There's no dates or amounts or snapshot information just yet, but we do have some information in this article. On that, at the moment, we're looking at Atom, Osmo, Injective, TIA, and Matic will likely be the eligible tokens to stake. So they'll also be doing a post-airdrop as well. So, you know, it's something that's worth checking out if you're using the Cosmos ecosystem to come and check them out. Maybe give them a follow over on X, give this article a read. This is just a Medium article of theirs, so give that a read. It's in the share that I did for this on my X, and you can go into all the details at the moment of what they will do with regards to the distribution of tokens when they airdrop. And just one last thing that I would like to cover, and that's mentioned before, that WEN trade, essentially. Because I did sell and rebuy back, I was able to buy an additional 15% on the profit that I took. So, I mean, this is why I like to trade this stuff. This is not looking that great though, overall. But the difference would be, you know, if I just held onto it from here to here, well, I would have the exact same amount of WEN. So even if this does roll over and put in another sell signal, I'm okay with that, because that would just mean that I would probably take profit on again and wait for the next buy signal, and then hopefully get more percentage back anyway. And also the Solana trade I mentioned in the last video, it was up about 36%, which is pretty cool. But we can see Solana right now bouncing between these moving averages. So we had a breakdown, we had a test of the 50-day EMA, then we came back up to retest the 21. We've already bounced off the 21 twice now though, so it doesn't look that great in terms of the EMA suppression of price. So there is a good chance that if we do roll back over here and we lose the 50, then we'll probably come down to the next step, which is the 100, which I've got a projection down here at around $90. But anyway, that's just a massive buying opportunity as far as I'm concerned, and this is just a trade that I'm using to farm more drift points. But anyway, that's it for today's video. So hope you liked it. If you did, then please give the video a like and subscribe to the channel if you want more content like this, and turn that bell notification on if you want to be alerted when videos come out by me. And let me know in the comments below what you liked about today's video, and if there's any other topics you want me to cover. And give me a follow over on X if you want all of the latest updates and things that I'm seeing in the crypto space. So until next time, keep safe out there. This is Kryptolytix signing out. Have a good one.